Now we're going to talk about not-for-profit organizations that are not associated with the government. Okay, so the Red Cross, United Way, a church. So something that benefits people, and people gather together and create this entity, and they don't try to make profits with it, but it raises revenues and it has expenses, so we need to keep track of it. And people especially want to keep track of these not-for-profits because they want to make sure that when they make a donation to, say, United Way, they want to know that their money's going to what they intend it to go to. All right. So we're going to learn what makes something a not-for-profit and who creates the rules for it. We'll learn, well, we won't really learn the accrual method of accounting. I'm going to assume you know accrual-based accounting in a senior level accounting class. We'll just talk about the few areas where it's different from what you're used to and what the financial statements look like. So we use accrual-based accounting to keep the accounts, and then those balances get reported on financial statements, and they're pretty similar to what you're used to, but there's a few differences, right? There's not no owner's equity, right? Just like with government, there's not owners, so it's just net assets. So anyway, you'll see it all, and that's what we're going to learn. All right, so not-for-profits. Remember, you could have a hospital that's run by the government, right? There's frequently county hospitals, city hospitals, things like that. And you could have a not-for-profit one, like Santa Rosa Hospital, run by the church or something like that. So you have some not-for-profits that are run by governments, and they fall under GASB. That's not what we're talking about in this chapter. So like Texas A&M Kingsville is not here to make a profit, but they're part of the government, right? Incarnate Word is not part of the government, right? So you can see that you got to make that distinction. So if it's government, back with GASB like we already learned. If it's private, you know, like the Girl Scouts, a church, Santa Rosa Hospital, things like that, not-for-profits, but not government, then they're going to fall under FASB. So Financial Accounting Standards Board makes the rules for accrual-based accounting just like for corporations. So we're going to follow those for the most part, with some special areas that apply to not-for-profits. All right, so FASB statements 116 and 117 do bring out the difference between private colleges, hospitals, and voluntary health and welfare. But they're very different, specific kinds of services. So we're not going to talk about hospitals and colleges. We got 2 chapters where we're going to take care of that next. All right. So what we're talking about in this chapter are things like a church, like a museum, like the city ballet, not the city, not belonging to the city, but a ballet company in a city, symphonies, private school, something like that. So that's what we're talking about in this chapter. So make sure you understand that there's different kinds of things, and also not things like credit unions, which or mutual insurance companies, which are actually businesses. They're just sort of incorporated in a way that they're not for profit. Okay, so this chapter is going to focus on the voluntary health and welfare organizations that are non-governmental, not universities, not hospitals, okay? Not banks, or basically a credit union kind of thing. So what's a VHWO? Well, promotes health, well-being of people out there. United Way, Girl Scouts. So these organizations, your church, they are going to keep records just like any other organization. So when a transaction occurs, they'll journalize it, post it to the accounts, keep track of the balances, and when the balances are done at the end of the financial period, they'll prepare financial statements. Here's what they prepare. Statement of financial position, like a balance sheet. Statement of activities, like an income statement, but remember, we're not for profit, and a statement of cash flows, right? Voluntary health and welfare organizations also prepare this extra document called a statement of functional expenses. It's recommended but not required for all of them. So voluntary health and welfare, so things that are doing things for other people for their health and welfare, like like you have a private cancer society, the American Cancer Society. So they're doing research and they're doing things and supporting people with cancer, and that's a voluntary health and welfare. So people want to know, if I give my money to the American Cancer Society, are they using it to pay $1 million to the executive, or are they, helping cure cancer? So why I'm giving my money. So this statement that we're talking about gets prepared for those kind of organizations where people are going to care about, hey, how many homeless people did you feed? Right? How many patients did you help? Right? So that people want to know about that stuff, and as opposed to how much did you spend for electricity? How much did you spend for travel for the vice president? Stuff like that. So that's what that's about. So keeping this, I think keeping purposes in mind, like why do we have these organizations, always helps me keep the accounting straight. Of course we're going to have that. That's what people care about. And that's what financial accounting is about. It's about transparency and telling people what's going on within these organizations. So of course we want to know how much of that expenses went to stuff that I don't really care about if I'm donating my money, right? If I'm donating to the animal shelter, how many animals did you help? Right? How did that go? How much expenses went towards helping the animals, and how much expenses went towards, paying salaries for people, the executives, stuff like that. All right. So, in governmental accounting, we used those funds, and they were specified, and they were used for special exact purposes, but not-for-profits don't do fund accounting. Now, that's not to say they won't keep funds, right? Keep some books that are separate and do funds, but the American Red Cross is just going to report all out as the American Red Cross. There's not going to be a bunch of different funds, although they may well have Hurricane Relief Fund, Wildfire Relief Fund, Flood Relief Fund. And they may actually have stuff like that. It's just their own bookkeeping, all right? So it's just accrual-based accounting, pretty much like you're used to. Except for a few little things. For example, the statement of financial position, which you might think of as the balance sheet, takes the assets and the liabilities, breaks them out. They're classified into current, non-current. The difference is assets minus liabilities equals net assets, right? Because there's no owner's equity, there's no stockholder's equity, there's not even what we call net position in the governmental accounting. It's going to be called net assets. And the net assets can be classified in 3 categories: unrestricted, temporarily restricted, permanently restricted, just like it sounds. A donor gave money, so these assets can only be used for that. Temporarily restricted, they can be used to do this, but then any income we make later can be used for something else. And unrestricted, that entity can use it for anything they want. All right, so here's an example of an animal shelter's financial statements. All right, so this is an interesting thing. We record pledges receivable. All right, so we would put those, so when you make a pledge to your PBS station, or you make a pledge to the animal shelter, they're going to put it down as pledges receivable. You haven't paid it yet, so it's not cash, but it'll be the asset pledges receivable and revenue. All right. Statement of activities. So revenue versus support. I'm sorry, if you gave to the animal shelter, it would be called support. The statement of activities is like your income statement, but again, what you're doing is looking at the revenues and the expenses, and of course you don't have a profit. What you're going to have is your change in your net assets, right? My cash will go up or down and things like that. So revenue comes in from exchanges, right? So I could be at the animal shelter, and when people adopt a puppy, I make them pay $80 or something. So right, so that's revenue from puppy adoptions. All right. Maybe I also, sell little things for pets, right? So those are revenues. You can imagine the YMCA. People join the YMCA and work out at the YMCA, so there's membership dues. Those are revenues. But the animal shelter also gets people making donations, and so does YMCA. So those are called support revenues. Okay. If something's restricted, right? So if in that classification where we talked about of restrictions, right? Restricted, unrestricted, permanently restricted. So if something's restricted, that means somebody outside said you can only use the funds for this. All right? So restricted funds means I pledged some support and I gave money to the museum and I said, museum, I'm going to give you $1 million, but you have to use it to buy paintings. That's restricted. Okay. So restrictions are in the equity section. Well, net assets, right? It's not really equity. Assets minus liability equals net assets. And that shows you what part is restricted, unrestricted. Now they don't tell you, any more about that or where it came from, but just know this much of our money is restricted. And at a pet shelter, maybe it can only be used to pay vet fees or something. It's like restricted. All right. So the statement of activities has expenses, and they're all reported in the unrestricted column. You classify expenses as program or supporting. So program means I'm running an animal shelter. It's going towards helping the puppies. Supporting would be, well, somebody has to do the accounting. Somebody has to do the legal services. Maybe there's an executive in charge. Program fees, I think, would include a volunteer coordinator pay because they're coordinating actual people working there, but administrative type stuff, support, right? It's not helping the puppy. So buying dog food, program, right? Buying pencils and paper, supporting. And restrictions, temporary restrictions must be released or moved to go to the restricted column. You have to make sure that restrictions are met before you can release them, because if restrictions aren't met, you could actually have a liability to the people who gave you the money. So make sure those are being met. All right, so we're going to stop right there, and we're going to continue on the next video.